So basically the basic differentiation that we can make in roles in finance is like buy side and sell side roles. Buy side services, so it's all based on financial services. So basically, if you are like if you are selling financial services, for example, the roles in research, sales and trading, structuring, and mostly portfolio management, depending on which side of the market you are. So these are and investment banking. So these are all sell side services where you kind of advise clients on what they should do to meet the required objective. And then there are buy side roles, which is mostly PEVC, so which is private equity and venture capitalists, where you are looking for financial services in the market. You acquire assets on your own book, and like so this is like the basic differentiation, buy side versus sell side. And most of the roles that investment banks have to offer, so they are mostly sell side roles. So buy side are mostly PE firms or VC firms. So we can talk about each role in detail. So first is the research role. So research is providing research services to the companies. For example, there are like, say, for example, like a client wants to invest in, say, Indian equities. So what are the different things that client should look at? So what are the, say, different, so that you may have seen some research reports on different companies. So what are the price targets, and how do they like come up with that? How each, so which is like a good company to invest in? So this is the role of research. So what you should have is basic finance knowledge. So how to look at different opportunities and evaluate them. And also you will have to like write a proper report which the clients can read. So I think good writing skills are also something that is required in research. So basically you do your research, talk to companies and talk on the, say, investor calls, and then you write a report based on that. And then it's like sales and trading. So sales and trading, so it's when you talk about financial markets, so these are the two major roles. So sales is mostly advising clients where they should put their money in financial markets, and so it's more like advisory kind of role. And trading is more like executing services. For example, if a client wants to, say, invest in maybe, say, Nifty 50 index, so how do they do that? So they just like say like, I want to invest like X amount of money in Nifty 50, and you do that for us. So trading is someone who is executing the client orders in the market, in the basically primary market. So what is really required is, so again, knowledge of finance and various financial instruments available. And this is because, so you, for example, if a client has a particular view that they want to express in financial markets, so I think it's more like sales role to tell clients which is like the best way to express this view. And the other thing for trading is like you need to be really quick in decision making, and like markets change, like so there are like, so this is like the single most important skill, I would say. So you need to be like really quick in like deciding like what you need to do. So for example, if you need to like yeah, so basically maybe you can take an example. For example, if you need to, say, invest in Nifty 50, and then you like the client placed some order that buy like X amount of shares at this price. So yeah, you need to be like really quick in deciding how to exactly do that. And also the other things which are important is for sales, it's definitely more communication skills, like talking to clients. They are like mostly on call with clients like for most part of their day. And then the analytical skills, which is definitely required in any role related to financial markets, maybe sales or trading. And then the third part is structuring. So structuring roles are, so mostly like, so these are like, so when we need to create like tailored products for different clients. For example, if client is like a high net worth individuals aged 50, so that client must have like different return and risk objectives. So the structuring role is to tailor a product, like make a customized product for that particular client, which matches the risk and return profile of that particular client. So you need to be really strong analytically. You need to like work with like analyze a lot of graphs, a lot of data to get to that particular tailor-made product. And then obviously like you need good quant skills. Maybe I think a bit of coding here would really help, because you are dealing with like a lot of data and analyzing that. Maybe like a simple basic coding skills would also really help. And then fourth is the portfolio management. So portfolio management can be either buy side or sell side. So when it's sell side, you are like selling portfolio management services. For example, you are like managing the portfolio of different clients. So for example, you like a client has given you like X amount of money. For example, like all the mutual funds that are like the best examples. So for example, you put like 1 lakh in some mutual fund, and then it's mutual fund's job to see how best to invest it and meet the criteria that they listed for their fund. So that is mostly sell side. And yeah, buy side can be like when you are acting as a participant where you are looking to buy different like any financial assets and building a portfolio for yourself or for your firm. Like maybe like say if you talk about Goldman Sachs, so they have like they have like a portfolio of themselves, and also they manage portfolio of the clients. So it can, in that way, it can be like either buy side or sell side. And yeah, the best skills here are you need to like really be updated of what exactly is happening in the markets, and maybe like any macro news. For example, like these days there's a lot going on about US elections. So like what will happen, who will win, and how to like manage your portfolio accordingly. For example, like maybe like for example, so these are like different like case scenarios. For example, if like say Biden wins, so what how to best uh, reflect that in your portfolio and how to adjust your portfolio to changing market environment. So this is one thing. And then so then you need to understand multiple asset classes. So for example, portfolio, you will have like all different kind of asset classes in your portfolio. For example, say you have some equities, some debt funds, and then you have like some FX products. So you need to all understand all these multiple asset classes and the risk reward, and also like more on like, so how do these each other are correlated so that you can like sort of achieve more like the best risk return reward. And then these are, then we can talk about PEVC. So these are mostly like buy side services. So PE is like PE is private equity. So here like the companies are looking to like buy out companies which are like sort of maybe they need like capital for something, or they are really struggling in the current market environment. So like, and the PE firms think that they can infuse capital into the firm and then change and make the company better. And probably like the exit options for PEs are to like, so basically like so the companies they acquire, it can be like either a public listed company or a private company. So they acquire like, they prefer to acquire a majority or a controlling stake. So it can be more than 50% or it can be less than 50%, but they need some control on the workings of the company so that they can change the course of the company as they think would work best. So yeah, so these are, and these are buy side because, so, and the sell side for these would be like, so there are different investment banks which would be pitching the companies to all these private equity clients. So private equity in that like is like definitely like a buy side service. And then the knowledge here you need is like, so it's more about financial modeling and also more about strategy. So the type of people private equity hires is like more from consulting firms or investment banking firms. So investment banking because they need to build like all the different financial models for all the scenarios that they think of, and then consulting firms because they need to see how, like, what is the best strategy for to run the firms that they acquire. So yeah, so these are like kind of two different kind of roles in a private equity firm. And yeah, I'm talking about investment banking. So investment banking is, so we can like broadly split investment banking into three different buckets, which is ECM, DCM, M&A. So ECM is equity capital markets, DCM is debt capital markets, and then we have M&A. So equity capital markets is, so when the firms want to, when the firms are currently private or they may be public, but they want to raise more money via public markets. So they would need some investment bank to get their firms listed, which is like so all the IPOs that happen. So basically these are like private firms which investment banks help to take them public. And then so these are this is all about private firms. But if, for example, a company, maybe say Reliance, wants to raise more capital, which is like, I think they recently did by a rights issue. So yeah, so that is another way where investment banking services are used by even public listed clients. And then we have debt capital markets. So here also, like, the companies are looking to raise money, but they are looking to raise money via debt markets. So they would place like some, say, X amount of debt with different investors, and investment banks again help here to decide what would be like the rate of interest, and who would be finding investors for the client, and so on. And then you have like M&A. M&A is more like, so basically you need to so the companies are looking to, say, for like they want to acquire a firm in their sector. For example, recently we can talk about, again, maybe like Reliance acquiring the Futures Group. So yeah, so this is basically more about acquisition. So mergers can happen. So for example, if there are two companies who think they can do well together, if there are like a lot of synergies between two businesses, then it makes sense for the companies to merge. And again, investment banks offer these services. So for example, they kind of like keep a lookout for companies like which are like good for mergers, and where there would be a lot of synergies. So here, like, the strategy and the business angle comes in. So you need to really understand what business are these firms in, and how can they like work well together. So like, what would be like the strategy for these firms, and how would they uh, so what would be like the best way, and then they pitch these ideas to the clients. And then, yeah, so this is mostly about M&A. And then the key thing here is like, you need to, so for example, if even these companies are looking for like, so very like kind of diligent people. So for example, you need to like work really long hours. So that's why, like, so even if we talk about finance, so these are the companies are really keen on like the college grades. So I think they think like that this is kind of a good parameter for them to judge whether the person can like work long hours or not. So yeah, so this is really important, especially for investment banking. And then again, so you need to be good at financial modeling, which is definitely the main part of the job, and also about the valuation, like how to value each company. And then there are a lot of different techniques and different tricks that we can use to value companies. So you need to learn all that, and also some of these would be asked in the interviews.